Hello and welcome to interest.co.nz. I'm Gareth Vaughan with another of our double shot interviews, and I'm joined by Antonia Watson, the CEO of ANZ New Zealand. Thanks for coming in and welcome, Antonia.
Hi, Gareth.
We arranged this interview some weeks ago and we anticipated we might be talking about all sorts of topics, but obviously events have overtaken us. And coronavirus is the only topic in town at the moment. So that's obviously the place to go. And obviously you were among bank CEOs yesterday who met with Finance Minister Grant Robertson. We've heard a bit from him. It'd be interesting to hear from you as well about that meeting. What was discussed and where do you think things got to?
Yep, and there was only one topic of conversation in that meeting really as well, which was the virus. And he talked a lot about the government's response and that they're planning for a range of scenarios. And it was good because we were able to assure him that we are really concerned to work with our customers to get them through this period of market dislocation, if you will, and make sure that we're really united around that message that the ministers help emphasise, that contact us soon and early if you're feeling any stresses and strains because of the impact on your business of the virus, and we're really willing to work with our customers to help them, and there's a range of things that we can do, like we do with the drought or anything else around loan restructuring or term deposits and those sorts of things.
So what are you hearing from customers at the moment? I mean, obviously ANZ is the biggest bank in New Zealand, so you've got a very wide range of customers. Yeah. What are you hearing and how impacted are some of them?
It's reasonably early days. It still feels very anecdotal. So individual customers are coming to us. They are tending to be in the expected sectors like maybe forestry, retail, tourism. There's certainly no systemic themes or anything that's coming through to us. And I think that's the thing with this particular issue with the virus, is that it will be horses for courses and there won't be one overall response. And I think the Minister was very clear on that as well, is that they're looking at very targeted responses because it depends on who you are and where you are, what the impacts might be.
And at this stage, you would feel that's the right approach?
I think so, yes. Yes, I do.
There's obviously been some comparisons beginning to be made with the global financial crisis. Obviously, with what we've seen in financial markets in the last 24 hours, it's been pretty chaotic. Mayhem, I guess, is a word to describe it. I guess the situation is a bit different because there's not a credit crunch out there yet. But in terms of credit, I mean, how's ANZ's capacity, and I guess the banking sector more broadly, how's the capacity to keep credit flowing to those who want and require it?
Well, interestingly, I think I've read 3 times this morning in different tweets or commentary, this is not 2008. And certainly from our bank's perspective, we're in a good position from a liquidity sense, and that's what was one of the big issues in 2008. The availability of credit, I guess there's 2 things. One is that you still want to lend responsibly. And the second one is we've had an interesting scenario this year appearing again where we've seen more confidence in borrowing, and I guess in the low interest rate environment we've seen lower deposit growth. So that could have an impact on credit ultimately. The interesting thing that might be a dynamic we see at the moment is potentially a flight to the perceived security, or the actual security we'd say, of bank deposits. So we'll just watch that play out. But at the moment we're in a very good position from a liquidity and funding sense, which is great going to something like this where you are seeing market dislocation.
I mean, obviously, I could ask you how long you think this is going to last, but that's, no one knows.
No.
Because of the unpredictability of a virus like this, and the countries that may or may not really impact badly, and including our own, we don't know yet. But I mean, I guess if this situation continues to develop for several months, is that liquidity position going to hold up at ANZ and potentially the other New Zealand banks?
I think we just have to watch how it plays out. We're very well prepared for liquidity issues now. The new rules that came in after the GFC have put us in a really strong position. We've got enough liquidity to cover all of our all of our offshore borrowings and/or all of our maturities for, I think it's something like 18 months. So we're just not in that sort of position where we've got immediate credit crunch. We can't meet commitments that are coming up really soon. So I think that's something that people should take a lot of confidence in, as those rules that were put in place in by the RBNZ is was as early as 2010, I think.
So that's specifically the core funding ratio?
Yeah, and it's really interesting. I mean, it's obviously a shame the circumstances, but watching those contingency plans play out in real life, we have our liquidity group meets regularly, and they look at a range of things and decide how we're placed against them, and they really are playing out, and the value of those ratios is really playing out.
So at this point in time, I mean, obviously one of the issues in the global financial crisis was overseas. You had a front row seat. You were working at Morgan Stanley at the time, and some of the other big US banks collapsed. At this point, we're not seeing anything like that. Hopefully we don't. And from your perspective, I guess for customers, for the public in general, you don't see any concerns for the banking system at this point in this?
No. I mean, from a capital sense, a funding sense, a liquidity sense, we learnt a lot from the global financial crisis, and we're in a very, very strong position on all of those now. So we'll be in an even stronger position on capital. Yes.
So at this point, it's really about endeavouring to help customers.
Yeah.
What was the message from ANZ and the sector to Grant Robertson in terms of what banks want or might want from the government?
There wasn't anything specific. The Minister mentioned that they're looking at some sort of working capital partnership. We'll be hearing the details, I think, over the next couple of days, so we're really interested in what that looks like, because one concern that we'd have is that overlay of responsible lending, and at what stage, is a small business far enough down the track that it's not going to help, and having some government support with that might be useful.
So would that come possibly in some form of government guarantee?
That's what the paper suggested this morning. I have absolutely no details on it, so I think we'll find out over the next couple of days.
And are you asking for anything like that at this stage?
We haven't asked for anything like that. That's something that the Minister suggested, and we're really open to hearing what he's thinking.
Okay. In terms of, I guess, the bigger picture, I mean, your economists have put out some pretty interesting reports in the last couple of weeks and talked about the possibility of the government sort of ramping up borrowing. Is that something that you think might be necessary? I think
the wonderful position that New Zealand is in is that we've got options, and that is one of the options. We have got a relatively low net government debt. We've got a little bit of capacity in our OCR, certainly not what there was around the financial crisis. We've already got the stimulus of the infrastructure program, and we're an exporter of food, and people will still need to eat. So I think in that sense we're actually in a good position potentially compared to other countries, and we're also a long way away and have control over our borders.
And in terms of the RBNZ, as you note, I mean, the OCR is only at 1% now, so it's not the 8% or wherever it was in the GFC. Nonetheless, people are anticipating cuts. Do you think we're going to see negative interest rates or quantitative easing in New Zealand? I
always leave that sort of commentary to our economists, because I'm just a mere accountant. But it is one of the range of things, and I believe the Governor's doing a speech today on non-conventional monetary policy, so we might all know a bit more about that later on.
Absolutely. Okay, so I guess then in terms of where things are at the moment, I guess if we sort of sum up, then the key thing is keeping the doors open at businesses impacted by this, keeping people in work, trying to avoid recession, because obviously that word has come up a lot. Are you confident that we can do that this year?
I think there's a wide range of parties that are very interested in doing that, and they're working really well together, and that's probably all we could ask for. And another thing I think related to that is also our staff wellbeing, and making sure that we are taking every precaution that we can to ensure our staff are safe. And so that's another thing that we're working on with hand sanitisers, and making sure that we giving customers options to not come into branches, and there are ways that they can do banking that don't involve that if they feel uncomfortable doing so or are showing any symptoms.
Okay. Now, I thought we might just throw in a couple of other topics for a bit of variety. Obviously, there's been a long-running situation with UDC Finance that ANZ is looking to sell, might sell, didn't sell, could sell. There's been quite a lot of coverage in the Aussie media about what's been going on recently with a couple of private equity groups touted as possible buyers. Where are things at with UDC?
We're in the process, and it will finish when it finishes.
So at this stage, would you anticipate a sale?
That's certainly what we're working towards, but these transactions are always complex, and anything could happen. You can see what's happening in the environment at the moment.
Yeah, I mean, and obviously the environment at the moment could change things.
Potentially. We don't know what we don't know yet, as we've talked about.
And I mean, I guess in terms of the sale, what's the key reason for selling what has been a pretty well-performed business for some time?
It is a very well-performing business. It's a really beloved business of ANZ, to be honest, and it's has a really great history in New Zealand with a really well-trusted and old brand. But even though it's the largest finance company in New Zealand, it's actually a very small part of ANZ, and we think that it can grow better and have more attention focused on it if it's not a small part of a large bank but is a big finance company in New Zealand in its own right. So it's mainly around what's the better thing for the business and how does it do better in the future, because when it comes to investment decisions, a small part of our business is never going to take the priority over a large part of our business.
And obviously the Reserve Bank's new bank capital requirements were finalised last year after quite a long process. That's obviously something you'll be phasing in over 7 years, isn't it? So it's quite a long time. One of the key changes they made in their final plans was the option for banks to use redeemable perpetual preference shares. How enthusiastic is ANZ on using those?
It's certainly a less expensive way to fund our capital portfolio, so we would like to have the opportunity to use those. There's still water to go under the bridge on how they might be structured, how they might be sold, who are appropriate investors for them. If we were looking to issue them offshore, there are potential tax implications that we'd have to work through. So it's still early days. I think there's an enthusiasm in the industry to use that tool. We just need to work towards what exactly it looks like.
And do you know at this stage whether they would be able to count as capital both for ANZ New Zealand and the ANZ Group?
No, because that will be one of the things that we'll need to bed down over the course of the next few months.
How significant would that be if they could only be capital for ANZ New Zealand? Would that be a problem?
I wouldn't expect so, just because of the quantity that we'd have compared to the group's overall capital, but I'm actually not the best qualified person to answer that question.
Okay. Well, look, Antonia, thanks for coming in, and obviously it's a very interesting and uncertain time in the world, so we appreciate your time.
No problem. Thank
That's
you.
Antonia Watson, the CEO of ANZ New Zealand, and I'm Gareth Vaughan at interest.co.nz.